Okay, hello everyone. I'm Dalika Steele. I'm a health policy analyst here at the Office of the Insurance Commissioner. This is the third meeting of the Obesity Treatment Analysis Advisory Group. Thank you all for being here. As a reminder, each advisory group meeting will be recorded and posted on the website after the meeting ends. The link to the advisory group webpage is on this slide, and we can also send it out again after the meeting if you need it, or put it in the chat. Please use the raise hand function or chat to pose any questions. So for today, the main purpose of the meeting is to go over the obesity treatment analysis methodology. So I'm going to give Casey a chance to go over that, and then you guys can ask questions once she is finished. Does anyone have any questions about that, or any questions about the group or the meeting? Okay, then I can hand it over to Casey.
Thanks, Lika. So today we're also joined by Dr. Carol Bazell, who helped draft the analysis plan from the clinical perspective, and also John Rogers, who is a pharmacy consultant who helped out with the specifically to the GLP-1 piece. So they may you interject to help round out some of the discussion that we're having here today. And also we have Norman Yu, who has been on prior calls. He is the actuarial analyst who is digging into the data and doing a lot of the modeling, so he can also jump in as needed. And two, if there's questions for clarity along the way, feel free to chime in as we go. We need to save it for a formal Q&A later. I want to make sure people are understanding as we go. Okay, and with that, I'm hoping that everybody had a chance to review the proposed methodology in the report. What we're proposing is to do an analysis where we would be looking at the 27 and 28 calendar years. We'd have a baseline, which is status quo, nothing changes. There is no proposed legislation mandating coverage, and then there's a post-mandate piece that is those same 2 years, but assuming that the coverage or legislation mandating that coverage does go into effect. So the difference between those two scenarios would be what we would consider the impact of this legislation. We're limiting uh, the analysis to the commercial enrollees, and that would include the public employees and school employees as well. The premiums were so in order to, I guess the first step of what we do when we're actually doing the analysis is creating like a shell model of what do we think premiums would be, so that and membership, what are the administrative expenses, so that way we can back into claims, and so that way we can get an idea of what's it going to do to premiums, even though like all of these pieces are just on the claims. So we did a survey of the carriers, and they provided their 2026 premiums, and we'll be using information that's available publicly as well as our internal Milliman tools to project what those premiums would be. The enrollees are based off of with the enrollment reports that were provided from the Washington Office of Financial Management, and we'll project that forward with is that the census information that you have, Norman? Is that what we're using for that? Or is it the Washington Office of Financial Management that we're using to project it? Um, so that just kind of sets the base, and also the administrative expenses. So that's just based on the historical data, those pieces. We're not assuming any changes to those components as a result of the of the mandate as far as the enrollment and the expenses go. So we don't think that there's going to be an increase in enrollment or an increase in administrative expenses beyond like the, we typically apply those as a percentage of the premium. Um, so moving on to how we actually now incorporate the uh, this mandate, we get into how we're going to identify who would be eligible. So we're identifying obesity, or we're defining obesity as enrollees with a BMI of greater than or equal to 30, which is the threshold for class 1 obesity. And that is based on the legislation language. So using the 2024 APCD, we're going to look for enrollees who have at least one claim with that diagnosis of in any position, and those enrollees would be considered as having obesity. Um,
Casey,
and go ahead.
it looks like Tanya has a question.
Oh, yes.
Thanks, Casey. This is Tanya Jewell. I'm the finance manager for the PEB and SEB programs at the Healthcare Authority. I think we've worked together on a few reports in the past. Um, as we are reviewing the methodology document, do you want us to kind of interject as we have questions on the document? Do you want us to wait till the end? How do you want to manage this?
Oh, go ahead and chime in as we go
Okay.
along. Yeah.
Okay, so my first question is really back to the data call. The PEB and SEB programs are mainly most of our enrollees are within our self-insured products. So I'm curious who participated in the data call for the Uniform Medical Plan, because I don't believe my team, which establishes premiums and trends, was involved in that.
Dalika, do you have the list of carriers that you include in the, or can you speak more to who was included in the data call?
I would have to take a look specifically for UMP or Kevin Sub and
Okay,
get that. Okay.
that would be great. Just noting Regents, as our TPA doesn't set our premiums, we, don't have rate filings. That's all managed at the Healthcare Authority.
Okay.
Okay. And then I have one kind of overarching statement just before we get into this is I just want to do a quick reminder that I know a lot of us are state employees and our stuff's subject to public disclosure, but the PEB and SEB programs are under active litigation right now. So I just wanted to do a reminder that anything that's shared between the PEB and SEB programs and this group is probably subject to a litigation hold. So I just wanted to put that out there as a reminder.
And this is John. It would also be potentially subject to public disclosure in a public data request as a result, or discovery, right, by the attorneys, right?
Okay. Um, so does anyone have any questions about who we're including as an eligible member? Okay, continuing through, we so we're identifying intensive behavioral and lifestyle treatments, and we'll taking the data and we're trending it forward, which is standard to any actuarial analysis. A lot of the trends are based on the Milliman Health Cost Guidelines, and then they'll be informed by regional variations and actuarial judgment. I will say too, I didn't give this disclaimer, it is in the report, but the we have not seen the data yet. We got access 2 days ago, so some of this is like when we put the trends in this report, like all of this is subject to change because there might be something that's like, oh, this didn't come out the way that or look the way that we were expecting. Why is that? And we'll do some more digging and adjust as needed. But this is I guess this is where we're headed and where we think we'll like our starting place, but it's not necessarily where things might end up. Like, for example, we might decide to change a trend or something of that nature later, and that's going to be based on once we actually dig in and start the analysis. The IBT services are comprised of three different categories. So there's the nutrition-related services, the physical activity, and behavioral counseling. Depending on the type of service, they may have been, a HCPC code alone, or it may have required the HCPC code with the diabetes-related diagnosis code. So that some of these more broad procedures that are done or visits, they will be able to parse out which ones are specific to obesity versus it's something else that those visits might be used for. Um, Once the services are identified, we are going to be using the utilization or the coverage of these services as they currently are. We know what the coverage is of the population that's in the APCD, so we'll just use that knowledge to kind of ratio up what the coverage would be if everybody were to have coverage. So, if the utilization per thousand is 1 and we know only half the people have coverage, then that would go to 2. We are not expecting changes in the cost per service as a result um, of this mandate. So we're not expecting to include any portion of that. John?
Yeah, just to clarify, and this was something we were really unclear about as we read through the methodology in each of these subsections. When it kind of flips between saying if someone has coverage and then speaking about the coverage in two different potential forms, right? We assumed, and I want to verify this, that generally speaking, you're talking about coverage for those services for the treatment specifically of obesity. Is that a safe interpretation in each of those
Ye-
subsections?
yes. Yes.
Okay. And so then and that then explains the ramping it up, ratioing it up, that it would be additional utilization that perhaps wasn't covered previously specifically for the treatment of obesity. And then I've got, Tanya may have other questions about this, but I've got all kinds of questions about how we're determining that that was the sole reason for the services and the cover. In other words, there's coverage now, right? And some of that might be related to managing obesity, related to other underlying conditions. And so I'm not sure that it's a one-to-one just because someone now has coverage for GLP-1s for the treatment of obesity, that there's going to be a one-for-one increase in the other lifestyle changes, behavioral modification changes, those sorts of things. So I'm just calling that out.
So you're saying that so for example, on the IBT services, you're thinking that they would increase with the GLP-1s instead of with the coverage necessarily. Like, it's like instead of going from that 1 to 2, as I said, it would be more of something to consider what the GLP-1 increase in utilization would be, and then some portion of those members would also use IBT services.
I think it's the reverse of that because, well, I shouldn't say most, but a number of potential factors that influence the uptake of the GLP-1s are going to be enrollment in these kinds of services, right? That you have to participate, let's say, in a behavior modification program, lifestyle change program. And so that to me would be a one-to-one increase. But getting nutritional counseling, they may already be getting those for something totally unrelated to, or at least what appears from a claims perspective, unrelated to the treatment of obesity. But that might very well be part of why they're getting those services today. So in that instance, it's not going to be just an additive, incremental add for the services. I'm not sure from an actuarial perspective, because I'm not an actuary, how to account for that. But I just want to make sure that that's being considered in the mix.
Yeah, thank you. Thank you for the comment. Um, we have a couple other questions. Emily?
Thanks. Appreciate this. John's question made me think of kind of a related question, and I don't know the answer to this. So the clinicians and the our insurer folks in the mix may have information to share, which is, are there enrollees who are receiving these services currently, not for the treatment of obesity, but for other things such as treatment of diabetes? And so we shouldn't be assuming in that instance that this will always be a net add, but instead maybe there's some back and forth between that. So my son Michael come off mute, so maybe you have some.
I mean, you it could, because some of them will be, for example, on semaglutide, and but the if used correctly, the FDA approval is for one brand for diabetes and another brand for obesity. Sometimes in real life, people will try to play around and switch between the two. But yes, I think again, both large manufacturers will have the FDA approval for the same ingredient, different brands.
Okay,
And
thank you.
yes, if you're on one for diabetes, you don't need to be on the second one for obesity.
That's helpful. And then kind of similar question for bariatric treatment. I know that, for example, in the essential health benefits package, we have an exclusion for obesity treatment and assume that in many ways bars enrollees from receiving access to bariatric treatment or some of the other treatments for the purposes of treatment of obesity. But I don't know whether there are approvals that are getting through on the basis of other related conditions, perhaps. And that might be just a question for the carrier folks or others who have expertise.
Yeah, on the bariatric side, I can't recall what the coverage is, but the coverage right now is very low. Like it's zero in a lot uh, of the for many of the sources of insurance, and low for the others. So we're going to have to use some of the other data to think about how like individual might respond to that, just because and like I said, we haven't seen the data yet, so it's hard to say at this point. Like, so it's a little interesting to write a methodology before seeing what the data is for these reasons. But yeah, that's certainly something that would be
And
looking at.
And I think you're answering my question, Casey, which is that the methodology will look at the incremental increase from any current claims that are currently there.
Right.
Got it. Okay.
Yeah.
And
Thank you.
Emily, I don't know if that was part of your question too, but they are also approved for cardiovascular risk reduction and for CKD and for obstructive sleep apnea and metabolic liver disease. And
You
we
want me
can
to try to
expect,
answer that one, Michael? I can try to answer that question.
yeah, go
I
ahead.
don't have a good answer for you. So in our data research, we know that they're newly approved for sleep apnea, for MASH and things like that. Essentially, like we don't know when in our underlying data, when we do research on utilization, we don't always know when the health plan is approving it for those specific conditions, because there's a lot of choice that health plans have there. There's some discretion they have on whether they want to approve it for those conditions. So essentially, we just group all health plans into two groups. You're either covering them for diabetes, you're covering them for diabetes and weight loss. And then we look at the incremental amount there. Unfortunately, that new aspect of these new indications, we don't have great research on how that's playing into things. I'm sorry.
Yeah, that's helpful. And I'm just thinking, I think there's some people who are sorting themselves into the use for other conditions who
Yeah.
are already captured in the data, who would shift over to a more straightforward treatment for obesity if that were permitted.
There is one bit of good news, which is that the prevalence of sleep apnea is just much lower than the prevalence of obesity. So hopefully it doesn't really impact the financial cost estimates that much.
Okay. I'm not seeing any more orange hands, so we'll continue. So I think we started discussing bariatric surgery. I mean, like I said, it is going to be limited. We're expecting to see it limited within within the APCD. The large group and the PEB and SEB populations do have coverage, so at least some coverage. So we'll be able to at the utilization and the cost for a case using their data. And to the extent too, if things aren't covered within the APCD, or we're not seeing enough of that data, we do have internal data sources that we're also able to use to try to help with our assumptions and see what the utilization is in other populations. And sometimes that's especially helpful if like some states have mandates to cover bariatric surgery, for example. And so you can, in those cases, you can go and look up a different state and see what's going on there. GLP-1 medications. I'm going to turn this over to John.
Thanks. So I talked a little bit about our approach, so we have sound research that tells us what does utilization look like with full coverage for weight loss and without coverage. One thing we wanted to bring up a little bit was the FDA label. So I think as a couple of people have mentioned, the FDA label isn't just for obesity. So it's for BMI of 30 plus, and it's also for individuals with a BMI of 27 and higher with comorbidities. That's actually quite a few people, but it's a lot smaller population than the folks with obesity. But we wanted to talk a little bit about our approach there from a plan sponsor perspective. Like if I was a plan sponsor and I was a fiduciary, and I had a choice between covering from BMI of 30 above or covering the whole FDA label, I would always choose to cover the FDA label. And the reason for that is you lose out on manufacturer rebates if you don't cover the whole label. So we think it probably makes sense to do the analysis assuming you're going to cover these drugs or just cover them in accordance with the label. Some of the proposed state laws I've looked at say you have to follow the FDA label, but we wanted to open that up for discussion. Carol, do you want to chime in at all? I know we had emailed a little bit back and forth on that.
I don't think so. I mean, you're completely correct. I mean, we looked at the bill and the bill says obesity. So the presumption is that is what's stated. There might be a difference in a carrier decision if there were this requirement about what they would do, I think is the point John's making, beyond what the bill says, right? They might make a decision. And I think it's a little bit unclear to us, again, about the rebate relationship. Like, would they systematically lose rebates if they only cover it for obesity, if the law specifies in the state that it has to be covered for that? There's some discretion on the part of the pharmaceutical manufacturers here. And I think that this is relevant to thinking about who is on, who are we counting now in terms of utilization, and like what kind of growth we might expect to see under the bill, whether we sort of include what I would call a behavioral response potentially beyond what the bill actually states. And so, wanting some discussion about that and thinking about whether sort of the view of the panel on that.
Looked like Matt, you had your hand raised. You're welcome to pipe up.
Yeah, I was just going to chime in relative to the BMI threshold and kind of what most plans do in terms of covering weight management medications and kind of our suggestion for that moving forward. So typically, most plans do the BMI of 30 or greater, and then also do the BMI of 27 or higher with the weight-related health condition. And so like common trends we've seen when most plans cover, weight management medications is they include both of those thresholds for the BMI requirement. So just sharing that as perspective and kind of recommendation in terms of including both of those in the analysis, just because most plans do follow that threshold in terms of the BMI requirement.
Appreciate that. Anyone else want to contribute to that discussion? Think through that. Okay, cool. Well, I'm glad we covered that one. So anyways, we're gonna plan on moving forward with that approach for now. Like Casey said, everything's subject to change. What else should we talk a little bit about? Should we get into the fun stuff like utilization and unit cost.
John, can you just recap which approach think you're gonna?
Yeah, so
You
we'll just assume that health plans will cover these drugs for the FDA label. So everybody BMI 30 and above and BMI 27 and above with comorbidities.
And that typically is the FDA criteria for GLP-1 medications. So that's typically what the FDA also follows for their coverage or for the
for all three.
coverage.
It's nice that all three are the same, so we don't have to create any confusion, at least for now. Cool. Should we talk about utilization next? Okay, so utilization, I would say, is probably one of the most challenging parts of this mandate. And there's a few reasons. If you go back 2 years ago, there was very little data on what utilization looked like for a fully insured population with full coverage. Now there's a lot of data. There's recent Kaiser Family Foundation surveys. There's been a lot of public studies. OACT put something out there for the Medicare population. The Congressional Budget Office has analyzed it. I did an analysis. So there's lots of people that have projected utilization now, and we're looking at 2027. My experience with these types of projects is that folks usually complain that our assumptions are too low. That's the most common complaint that we get, is people can't believe how low of a number we have. So the numbers that I gave Casey, she has a low, medium, high, and it's a pretty wide range that I think will hopefully make everybody happy. But I wanted to hear if anyone had thoughts on those numbers she had shared. What is it, Casey? It's something like 8, 12, and 16% of individuals with obesity would be using the drugs or something like that. Can't recall exactly what you had. Something like that. All right, did anyone have any thoughts on utilization rates? And one thing we'll have to do to be a little careful at, and this is why things are subject to change, is that the claims-based prevalence of obesity is always a little bit lower than the prevalence of obesity that you get, from public health sources like the CDC and things like that. So we just need to be careful that we're being consistent. So whatever the claims say the obesity rate is, we need to make sure we're not undercounting utilization rates, because we're not potentially, counting some people that aren't seeing a doctor or something like that. That makes sense.
And yes, John, those rates were 7.9, 12.7, and 16.3.
And then, John, just in terms of utilization, injectable versus pill, oral, given that there's now just even another GLP-1 that was recently improved for oral form, how was that factored into your thoughts about utilization rates?
Oh my gosh, I don't have thoughts on that. The oral, we're only in month 4, I guess, now of oral. I think there's been close to 100,000 scripts now, but it's a lot less than probably the tens of millions of people that are on injectable. So I'm expecting the oral to increase rapidly and to be an issue in 2027. Well, I shouldn't say issue, but be, common in 2027. But it's my best guess, I would say.
So the question is, it's a lot easier to take a pill than it is to inject yourself.
Oh, yes. Okay.
So
yes.
Does the increasing availability of the pills make you think about maybe the projection should bump up a little bit? Just that's what the kinds of things, because I think Rocky Patterson's on, we were thinking about one of the big unknowns in this whole project is how quickly treatment modalities are evolving, one of which is the availability of pills versus injection.
Yeah. So that's a fantastic point, that the oral version is a lot of people that wouldn't want to inject themselves would be happy to take a pill. So that middle scenario that we have is actually on the high end maybe I'll pull up. So we're gonna go. I'll pull up my kind of study aid that I like to show.
I was just going to offer one offsetting point there, though, with oral drugs in general, requires a lot less commitment to an oral drug. And typically, for many chronic oral drugs, we see relatively low adherence in general and persistence. And so there's a trade-off, right, between it's easier to take, but that might mean that people who are less committed take it and they might not stay on it too. So there's that counterbalancing force. Like to get over the injection hurdle requires some level of commitment. I think we see with the expansion of coverage compared to clinical trials, much less lower rates of persistence than in a clinical trial because you're expanding it to a more general population, right? When you move to injections in the real world, I would say moving to oral drug availability required coverage in the real world is yet another step in that direction. And taking a pill every day is hard and requires like a level of commitment. And it may be that people entering the population, it's a lower level commitment, are less committed, so then they might not persist on the drug as long to achieve weight loss or in general. And so that's just worth thinking about that factor as well. I think there's a fair amount of information available about like oral versus injectable treatments and sort of relative rates of adherence and persistence in other conditions, not necessarily in obesity because of the newness, again, in the real world of the oral version.
So we're going the utilization rates we suggested amongst obese enrollees are 8%, 12%, and 16%. So 12% is kind of our middle. So let's talk about 12%. So that 12% actually represents the high range of what I would consider reasonable. So my reasonable range is 8 to 12, but we're actually putting the middle a little bit on the higher end because folks usually think we're kind of under predicting a little bit. And to try to demonstrate that a little bit, I'm sharing a pretty good public source for some other independent estimates of utilization rates. Now they're for the Medicare population, which I know is just a different population, but it's the best I can kind of share in terms of other projections of the uptake rate. Okay, so you can see OACT. So this is the CMS actuaries. They had 10% in the first year, and then a small growth rate. The Congressional Budget Office had this 2% and rising over 8 or 9 years to 14%. So we're below that one. We're above that, above this one. We're above the CBO numbers. We're above the OAC numbers. And then this third one, they had 5% and 10% was the uptake rate. And we're above those ones. So I think we're a little higher than all three of these, which hopefully would satisfy some of the comments around the oral version, hopefully.
Yeah, I think it would be great in the report to sort of put in some of this context around how you arrived at the utilization projections that you came up with. And Carol, I think your point about the difference in a periodic injection and a once-a-day pill also would be good context to put into the report, given that I think a lot of people are going to ask that question. Well, now there's a pill, right? So thanks.
Perfect. That's fantastic feedback. Any other thoughts on utilization? There's lots we could talk about. We could talk about supply chain shortages, other
Emily?
things.
Thanks. I don't know if you want to talk about utilization for some of the other services, but I had a question about how they interact. So for example, on bariatric surgery, we have a utilization trend that's looking at current PEB/SAB, if I'm understanding the proposal correctly. But PEB/SAB doesn't currently cover GLP-1s, right? So if more people have access to GLP-1s, will they be less likely to be going to bariatric surgery? Is there some interaction between if there were coverage for all three treatment types? Does that make sense?
Carol, do you want to take the first pass at that one, or I'm happy to share some things I've heard?
Go ahead and share what you've heard, and I'll follow on.
So what we heard when we talked to some physicians at UCSF is that it goes both directions, like you explained. So there's some folks, for instance, for bariatric surgery, for instance, where gaining access to GLP-1s might help them, quote unquote, get healthy enough or lose enough weight to be able to get bariatric surgery. And then there's other individuals that might go on GLP-1s and be less likely to go on bariatric surgery because they lost so much weight they wouldn't need it. So we've heard it can kind of go both ways. My personal opinion with surgery is that, surgery rates aren't going down. Surgeons are trained to do it. It's an established procedure. I don't think surgery rates are going down, but I don't think we were intending to model any interactions, at least between bariatric surgery and GLP-1s. I can't really talk about the IBT much.
In general, in addition to what you discussed, John, like the other sort of emerging literature is people who have both purposely to like sort of deal with the metabolic sort of improvement that potentially, aside from weight loss, just the metabolic improvement associated with GLP-1s that improves recovery from weight loss and all that goes is associated with that. So I would say, like, from my sort of knowledge and experience and talking to people, like, it's really evolving the role of these different therapies and the interactions among them. I think we'd be hard pressed to sort of say what that interaction is going to be or to model it and predict, given the various approaches that are being taken here. Again, everybody's trying to move toward the same objective and have patients have the most productive weight loss experience and be metabolically as healthy as they can be, regardless of the modality or modalities that are being used. And people are still trying to figure out that path, like for individuals. And I don't think there's a clinical consensus yet, which I'm just doubling down on sort of the complexity here, in addition to what John had to say.
Thanks for explaining that. I appreciate it.
Okay, Casey, we're going to talk about unit costs. You have to remind me the numbers we're using. There's a lot of unit cost numbers out there.
Yeah, so again, we're taking the low, medium, and high approach, and for the drugs that are obtained through insurance, we're assuming 450, 600, and 750. And we also take into consideration something that wouldn't show up on our data, but drugs that are purchased outside of the insurance. And so we're assuming that those would be 210, 315, and 420.
Yeah, so to add a little color, those net prices of GLP-1s are kind of after rebates. The list prices that people used to see of $1,000 or more are quite high, but we expect plan sponsors to be getting rebates for these drugs, so we're using net prices, which will better estimate the financial impact. I think our numbers are quite reasonable there. But the hard part about the cash pay is there's so many. Cash pay is such an emerging thing right now with these medications. We've never seen this direct to consumer market like we have for these medications. So that's evolving. They're always offering teaser rates and discounts and things like that. But on the unit cost thing, I think we've done a nice job. Any comments on unit cost?
I was just going to say anecdotally as well, like what we've heard in a number of scenarios is people with coverage, but because of the cost sharing structure, electing to use the sort of, again, the cash pay scenarios, which again used to often be prohibitive. Sometimes those plans on other drugs like preclude you, if you have coverage, from using their direct to consumer programs. And that is not the case here. And the cost structure in some plans is leading to more expense, more cost share on the patient's part than buying from one of the manufacturer plans. So that it's very complicated in terms of people who might be directly paying and even inferring whether they have coverage or not, because they could be there might be some choices being made that are not the typical experience that we've had with other medications.
Yeah.
So,
If your deductible is like north of about $2,500, you're probably better off going cash pay right now.
and then are there assumptions about what tier of the formulary the carriers, right? Because if it's considered a specialty drug or if it's like tier 3 and you're looking at coinsurance and the coinsurance is pegged off of the list price rather than the price after rebate, I assume that could get pretty spendy. for
I've
folks.
talked to a couple plans recently, not that are exactly that situation, right? The tier coinsurance is pegged off the whack, essentially, which is leading to a higher price than a patient would pay from us, and patients choosing to not send, not do this through their insurance, or sometimes it depends. Some payers will have a plan where if like only certain doses are available through like mail order pharmacies and things like that. So patients might be starting their treatment, not self-pay, and then moving when they reach a certain dose to a plan paid claims. And so that is also something that I've heard at least one plan talk to me about that experience. Patients that look like they're entering at these higher doses, but it has to do with their structure, their cost structure. And clearly, when they dig into that, patients are self-pay up until they get to a threshold where it's financially like reasonable for them to go to their insurance pay.
To the plan.
To
The
plan.
other thing that's interesting to think about, because I just thought about it, is Congress just did the PBM legislation that applies to ERISA plans and which is relevant here, that, if I remember correctly, said that the benefits of rebates need to be passed through to the plan, not to the consumer. But I have no idea whether that new legislation would influence plan design at all.
Is this I know there's this ongoing FTC settlement with Express Scripts and CVS just settled. Is it that, or is this a
no, it's in the actually, Lucina would probably know about this. In the most recent labor HHS appropriations bill, there are a number of provisions related to PBMs with respect to plans governed under ERISA and Medicare Part D. Lucina, you want to weigh in on that?
Yeah, it's the Consolidated Appropriations Act, and it just says that we have to pass on rebates back to the payers. So whether that be a government entity, commercial carrier, whatever that payer is, that rebate money has to go back.
Yes, that's our current assumption. Yeah, our current assumption is 100% pass-through rebates.
Okay.
Thanks for
I
clarifying
had a
that.
couple of questions, and I apologize. I can't figure out how to raise my hand, but I wanted to ask a couple questions on utilization. Is there any control? I'm thinking about, we talked a little bit about the people that are on cash pay right now, and they are opting to go to cash pay because it's cheaper than going to the pharmacy to get it's cheaper generally. And then you also have the compounded medicines that people are using that are much cheaper. Are we factoring anything into, like, how do we account for those people that are on cash pay and that will transition to commercial coverage if there's a mandated coverage of that?
Yeah, Casey, that's kind of a standard thing we build into all of our modeling. Do you want to talk through that?
Yeah, so we like to assume, if we think that people are accessing the benefit right now and paying out of pocket for it, what we do is include that in the baseline of, and include them as cash pay. And then we assume that those enrollees switch to using through insurance. One thing that we haven't considered here is leaving some of them cash pay for that reason, of, maybe their deductibles are high, and they would continue to do it that way just because it's more financially advantageous to them. But generally, we would shift those members over, and we might do that. I would lean towards doing it here just to show what the higher end impact would be on insurance. Because it's hard to know what the cash pay market is, so those are already assumption driven, and so just for demonstration purposes, moving that over into the insurance financial responsibility would give you more of a high-end estimate if everybody did that.
Okay, yeah, because I think with obesity, it's complicated because you have the direct-to-consumer purchase prices, which are generally a nice savings, but then you have a lot of folks that are going to compounding pharmacies have in the past. Now I think they're trying to, shut that down, but at the same time, there's quite a significant savings if they go to the compounding pharmacy option.
Right. And there's been some, restrictions to compounding or trying to limit the compounding. And it's really hard to say where things are going to be in a couple of years. So that's where, like I said, we generally would just shift those members over. If the group would like to see some of them stay in the cash pay, we can certainly do that. But then it's like this additional piece of the population that's sitting out there that's like, well, they could possibly come over. And one part of the population that I do want to touch on before we get to you, Matt, is that we are going to exclude enrollees who are accessing these drugs for diabetes. So there is currently coverage for these drugs if someone has diabetes. So we're assuming that they have access to GLP-1s under that. Like they're currently using them as it is, and so we're not going to include them in the increase as a result of this bill. Matt?
I was going to mention a couple of clarifications on the bill language. So it's just FDA approved obesity medications. So there's no impact. We're not talking about compounding medications there. And then also RISA plans wouldn't be impacted under the bill too. So it's just all state regulated plans. So just clarification there on that.
Yep, we're modeling consistent with that. So we're not saying that people are going to be getting compounded drugs covered by insurance afterwards. What we're saying is that people are going to stop using compounded after they become covered by insurance, and they'll go to the FDA approved versions.
A quick comment on that. Technically, compounding is only allowed during shortages, right, by FDA. So if you copy a drug that's still branded when there's no manufacturer shortage, that's not really legal. So there's some FDA rule around that. So I don't think compounding should really be taken into account here. I mean, what we see right now was based on a shortage that we had post-pandemic and the manufacturers trying to get back on track. But the drug needs to be on the official shortage list in order to be compounded. Otherwise, we start compounding every single thing out there.
Yeah, I had been under the impression that that was the main reason why they were compounding for many years. And then I'd been the impression that if you had a special formulation that wasn't offered by a typical manufacturer, that was another reason for compounding pharmacies if it wasn't available. I do know that there's been a lot of settlements recently between the compounding pharmacies and the major manufacturers, and it's an area of a lot of friction. And that is an area we're getting feedback on that do we really want to model compounding at baseline? I mean, it's happening, right? Whether it's totally above board or not, I mean, it's certainly happening. People are purchasing drugs through these compounding pharmacies.
And I think there was some FDA clarification that came, I think, April 1st around that.
Mm-hmm. Yeah. So if the group decides that they want us to just kind of eliminate any mention of compounding at baseline, I think that's something we can certainly do. I don't see any issues with that. It's not going to change the financial numbers, I don't think, because the direct-to-consumer numbers are pretty comparable to the compounding numbers.
I wouldn't rule it out. My understanding is consistent with yours, John, that there might be cases where it's legal. And as the cost increases, those that are most price sensitive, even with insurance, may shop, right? Especially based on economic conditions. So I wouldn't rule it out. I think it's worth sensitivity testing, especially if you have the higher cost at the higher unit costs and then higher trend rates. I think that makes sense. Even if it's just reflected in utilization assumptions under those scenarios, that interaction.
Yeah, so Michael, thanks for sharing this link. I think this article is saying they can't make exact copies of the GLP-1 medications. I think what these compounding pharmacies often do is they do slightly different doses. There's a limited number of doses available for the major manufacturers, and I think one of the ways the compounding pharmacies kind of get around the FDA rules is by making kind of little different doses.
I was going to follow up with questions. You were talking about low, medium, and high. Are you thinking that you would essentially combine all the low, all the medium, and all the high? Those kind of, I guess,
stack them like
in your stack. Combine them to have your three scenarios. Or are you thinking about mixing and matching in different ways? Like, what are you thinking?
Yeah, good question, Rocky. So we're just going to have the three scenarios, and there's going to be quite a variance, right? Because if you have a low utilization and a low unit cost and a high utilization, high unit cost, the scenarios diverge pretty big, so you get a pretty wide window. But that was our plan. And then even for offsets, we haven't gotten to offsets yet, but the low scenario would have the high offsets, and the high scenario would have the low offsets. So it would give you that kind of full range.
So I guess I'm also kind of thinking about, we were talking, what I was just referencing is that, in a high trend, high unit cost starting at that point, generally, cost is king. So utilization might not be the highest under that scenario. Something that we should consider. I don't know if you were thinking about testing that and how sensitive the results are to those kind of interactions. But I think it might be worth exploring.
Okay, thanks for that feedback.
Okay, moving on. The non-GLP-1 obesity medications, we're going to be modeling these similar to the other categories. We have the low, medium, high assumption of, sorry, my PDF is acting up, so that's why I'm a little slow on this. So those with insurance, we're assuming a utilization rate of 10, 33, and 50% of the utilization rate of those covered. So there will be some coverage within the data set, and so we're going to try and rely on that, but it's really going to be hard to it's hard to say what we'll do because generally these non-GLP-1 medications don't have that much utilization to begin with, and so we'll likely have to revisit some of these assumptions once we get in there. The retail price right now of Ali, which is an over-the-counter weight loss drug, is currently $50 to $60, and so we are assuming that out of the average out of pocket for those without insurance to be in that range. So moving on to the more fun part, we have the medical cost offsets associated with these obesity treatments. So there's a study that showed that the expected weight loss at different category, or the expected cost savings on medical care for different weight loss thresholds. So at 5% and 10%. And we trended these and are applying an offset of plus or minus 20% to get to the low, medium, and high scenarios. But in 2027, the mid scenario would be an assumption of $890 savings on just the medical cost for those who lose over 5% weight loss, and then $1,700 savings on those who lose over 10%. We're not taking into consideration anything other than the medical costs. So sometimes people think about like the more broadly, like, the less absences from work and things of that nature, and we're not considering that in our analysis. It's specific to the medical cost. Both of those values are on a per enrollee per year basis. So we would apply those savings to the new users as a result of this legislation. So that difference in between the post mandate and the baseline. The number of people that we expect to achieve those weight loss thresholds is going to vary. I mean, there's um, a lot that can go into how much weight somebody would lose, starting with how much weight they started at, and adherence and things of that nature. So taking all of that information into account, and you can see if you have the report in front of you in exhibits 2 and exhibits 2 and 3, all of the sources that were considered when looking at how much how effective these interventions are at at achieving these different weight loss categories. And these were annualized, so to think like over the course of a year, if somebody would be able to achieve that. One thing we're considering, and it depends on how you'd want to look at this information. I mean, no one's expecting there to be a savings in in that first year of using the GLP-1s. And so typically we would assume the savings would occur following that. But we do have situations where our readers of these reports aren't used to thinking about things being shifted in that way. And so sometimes we reflect the savings in the same year that the treatment was actually administered, so that the readers don't get confused as to why there's a cost in the first year and there's a savings, but the savings isn't calculated on the people and there's a savings in the second year, but not on the people who are taking it in the second year. It's from the people who are taking it on the first year, and there's an adjustment for who's taking it in the second year. And so it really depends on the readers here and how we'd want to consider that relationship. Because right now we have it written that we would include those savings in the same year that the treatment is received. With that, I'll open it up to thoughts and comments. And Carol, was there anything? Carol's team did develop these assumptions, and so Carol, is there anything that you'd like to add?
No, I think that the main issue is the percent of people that achieve savings might be lower than you expect, and because the effective rate, like it's a combination of if you take the drug and you persist on the drug, what weight loss was achieved, typically in clinical trials where the adherence was close to 100%, right? Very little drop off versus the real world experience, which is much lower persistence on the drug. Many more people starting it and stopping it, not staying on it long enough. So that impacts, like, if you have a whole population of people who start it, who will actually, like, what percent of those people actually will have achieved the weight loss. And again, things that we've already discussed, like injections versus oral drug, like these could affect things beyond what the literature suggests. Most of the population on the real world experience with injections is like as recent as like 2024, right? So it's not today, but it is, and it certainly doesn't include oral drugs. But I think there is certainly some anecdotal evidence with the expansion of coverage. Again, persistence might even be trending downward in some cases because, again, you're expanding the pool of people, the level of commitment they have to get through to sort of get approved and all the things. And so there's that. But probably it also has to do with who's self-pay and who's entering actually the insured mix. Could they have already been on the drug and then move from self-pay to insurance mix? So, but I think it's just worth thinking about when we talk about the effectiveness, like what percent of people will have achieved 5% weight loss or 10% weight loss. We're considering, again, sort of the clinical trial information around if you take this drug and you pretty much adhere to it for a year, what would you expect to achieve in terms of weight loss? What percent of people would achieve 5% or at least 10%? But then coupled with what percent of people who start the drug, we expect to stay on the drug long enough to be to actually achieve that weight loss. And that drop off is pretty substantial, and at least in the literature, and so we've included that in our like percentages that we expect to achieve a certain level of weight loss.
I don't see any hands, so I think you did it, Carol. Um, okay, the last section we have are just other considerations, and these are things that we're still considering. And like I said, not having the data, it's hard to say what to do with some of these, like the cost savings adjustments. If someone is using more than one of these services, so we might want to look into how many people are using more than one of these services that currently have coverage to uh, help guide what an assumption would be on that. But that's, just in the back of our heads, these are things that we're thinking about. Um, adjustments for short-term increases in office visits and labs as a result of an increased access to obesity treatment services. If we want to make adjustments for adverse events that might result from use of GLP-1s in the first year. We have the off-label prescribing of generic equivalents and the impact on anti-obesity medication usage. And John already touched on the manufacturer rebate one, which I think we've come to a resolution on the call. That's in a nutshell what we have to model now that we've got the data, and that's what we plan on digging into next week. So are there any questions or clarifications people would like?
Casey, you said this methodology was based on not yet having had access to the data. If the methodology has to change once you do have a chance to look at the data, how would you guys manage that with the advisory group and everything?
I mean, I think it would depend on how big of a change to the methodology we're talking about. Like if it's something with regards to, a change trend, or maybe we add a couple of services or something like that. Like if it's not going to be a large financial impact, but we believe it's going to be more accurate, we'll probably just go ahead and make that change. If it's something larger that we uncover that would substantially change what we've laid out, like not something from like like I said, no, the numbers laid out here are really I mean, the assumptions that we have for like the costs and things like that, maybe more data has come available and maybe that's worth expanding the range, shortening the range, moving the range, and depending on where that goes, we could certainly, we meet regularly with the OIC team and could let them know what's happening, and they can alert the advisory group to see if anybody had comments on that, so it doesn't slow the analysis down. But yeah, I think that's how we'd probably approach any of that. I don't foresee anything happening to a point where we would need to have like an emergency advisory team meeting. I think it would probably be able to be handled via email. I should hope, but um, healthcare since tends to change more than some of the other industries, so we'll see. I say that now. Um, does anybody else have any questions or comments right now? Like I said, we're going to get started with we're doing the data reconciliation right now and, getting started. I should say converting the coding because, we do have this laid out and have started looking at our internal data. But we will be able to make adjustments if there's other considerations that you come up with after having this call and you're thinking about it over the weekend and want to shoot an email, we can certainly think about some of these other some of what we went over today. I'd say that we'd want to be able to get the comments by, what did we say, Norman? Was it the 10th? Is that your date? So it'd give you a week to respond, so that way we can start making edits to the code as needed. Hey, Delike, I'll hand it back to you.
Okay, so if there are no more questions, we can wrap up. So like Casey mentioned, if you guys have any additional comments, you can email both Casey and the OIC team, which is me basically. And did you say April 10th for those comments? The latest. Okay, so by April 10th, the latest for those comments. As I've mentioned before, the meeting is being recorded, so this meeting will be posted to the OIC webpage so that you can like watch it back if anything, if you need to like or anything. Our next meeting is scheduled for June 26th, and I'll send an email about a week prior to that with any information that you need to review in preparation for that meeting. And also, if any questions come up between April and June, you can also just email me as well, and I can get you some answers. If there are no more questions on anything, then I will end the meeting and happy weekend. Bye, everyone.
Bye bye.
Bye.